Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Monday, and it looks as if we had a follow-through day on Friday, and that is sort of a signal to start moving into the market. Now, we had that signal for a follow-through day on Friday, but we also had, and I want to show you this, we also had a tremendous uh, tanking of Chinese stocks. So if you're in any Chinese stocks, please review these stocks. Li Auto, Neo, those kind of stocks, please do that because they have fallen tremendously. And it's just, it's pretty much of a bloodbath out there. So here's the thing, who knows if they're going to come back or not? I don't know. I'm not an expert, but I tell you what, they're clamping down on many of the Chinese firms. So if you're in like Neo or Li Auto or anything like that, please consider selling them if you're down at more than 7%. The market did move to a confirmed uptrend, and what this means is that we got a bounce finally. I know the news out there is terrible in every shape, way, and form, and it's just awful. But that sometimes is when the market moves, and I think that's definitely the case here this time. We're gonna definitely see that this time as well. So, now is the time to start looking for things that possibly may make sense to buy. And that's kind of the situation here. That's what I've been doing this the today is I've been buying many of the many of the things, and I'm going to show you that in just a second. But interesting. When these fall through days happen, everybody kind of gives up hope, and then you get a fall through day and you get a bounce. Now, do I think this is going to be a long term bounce? Probably not. I still think we're in a downward trend in the market, but these are buying opportunities. And here's kind of what I want to show you about the Chinese stocks. There is an ETF that covers the Chinese market. It's called the Invesco Golden Dragon, and the symbol on this one is PGJ. And today it was down almost 25%. You can see a tremendous amount of selling coming into the Chinese names, and it just is not looking, it's just not looking good for those names. So just be very, very careful here. As you can see, it's been in a downward trend really for a year. It did kind of hit its top, and now it's just starting to sell off. So part of the problem here is not the profitability necessarily of some of these firms. The problem is the overall political situation in China, and it's a lot of risk there in terms of that. So be very, very careful when it comes to Chinese stocks. Here's kind of what I've been doing, in kind of what I've been doing. Now, on Friday, I was in ExxonMobil and AEHR, and I added Lilly. Today, I added two more. ASML, this is a semiconductor equipment manufacturer. And of course, because of the movement away from a lot of the Chinese foundries, especially, let me explain that. In Taiwan, there's going to be building of foundries all over the world, both in Europe and in the United States. And one of the key components of this is lithography, and ASML is the world leader in lithography. It was up today. The buying was up 104%, and the stock itself was up 11.42. So all in all, I'm along all of these stocks now. Also, I did do something, and I may regret it. I shorted Tesla today, just a half position, kind of a small short for me, but I shorted Tesla because I do think that this is a very key area that it's gotten to. That's about the 206 level. It traded up a little bit to 211. I started it actually at 206, so I'm a little bit down on this position. But if we get a movement down from the 21-day line, I think that we'll see some action on this one. Interestingly enough, before it was extremely hard to borrow shares for Tesla, and that has essentially changed. So interesting thing going on with Tesla shares. You can seemingly can now borrow them, which is very interesting. Which is a very interesting situation. Just wanted to put up there also that we still have the we still have the there we go. We still have the ready list available for everyone. Let me see if I can make sure that that's in the frame here for TikTok. That's at https://bit.ly/DTF underscore, and you can't really see this RL. So what I'm going to do is I'll just put this up on the screen here so that everyone can see it. And let's see if we can do that. This is the ready. This is the oops, no, this is the ready oh, no, it's not the right one either. Uh, this is the ready list. There we go. There we go. All right, this is our ready list here. So we'll just kind of run that crawler down at the bottom of the screen. Hope you'll be able to see it. And also, I'll put that into the comments as well, so everyone can see that. So thanks, and here we go. So let's take some questions here. Thank you so much, Charles. You're always on the. I just want to take from Sarah first, if I could. Jim, I'm 100% in cash. Please give me a sticker. I will buy. Thank you. Well, you know what? I think what you can do, at least in this term, at least in the short term, is move to is move over to the U Pro. I think that's kind of the easy way to and this is what I did too. I actually bought some of this some of this today. So this is one I kind of want to show you. This is one I think you can just go into right away. It's called the U Pro, and I didn't put the right one on. There we go. So it's U Pro, UPRO, and I think that at least for a short term, this is where you can sort of move into the market. And again, this uptrend may not be for all that long, but at least for right now, I think this is going to give us some good opportunity here. And this is it's a little bit off after hours. You can see here where I bought a half position at 32.19. We're up actually a little bit today, 33.11 here. I do think we're going to turn the corner here, hopefully, on this one, drawing the trend line here. You can see we've moved from a downward trend to an upward trend, just barely. But what I like seeing is all of this volume coming in here. These are the blue spikes here. And so this is one I definitely think that you could possibly you could possibly do something with. It's called the UPRO, UPRO, and I think that might be, at least for the time being. Now, here's the thing with the UPRO. You want to buy it and you want to keep your stop losses within about 2 or 3% on this one, because this one, when the market moves down, this one will change. So see how it trades in the morning tomorrow. If it's a little bit of a pullback, this one might be a good one to go with. This one might be a good one to go with as you're trying to come as you're trying to come into the market. So this is called the U Pro, and it's an ETF, but it covers it's leveraged, and I think that you might do well with that one. So I'm definitely in that one as well. Let's see, I can show you my position in the U Pro. I think, did I have it up here? Let me make sure. Let's see if I had it. Yes, U Pro. I bought the U Pro today, and we were up, and the volume was up as well. So that's one I consider. You probably don't want to buy AMSL right now because it's such an expensive stock. It's like $471 a share, which is kind of expensive. I'm also up on Lilly, which is looking pretty good, and you can still buy Exxon as well. Those are the ones I have. Now, if you want to look at other ones that are getting on the ready list, again, that's just super easy. Just go over, just go over and just go over and get the list from that. So let's see if I got that. Oh, did I have that up here? Well, I definitely have that. I definitely have it on the slides here. So let's put that up there. Oh, okay. Let's see if I got the slides up here. So, and I need to put this in the. There we go. So this is the address for the ready list. Super easy to get it. Just https colon slash slash bit.ly slash DTF, and there's an underscore here RL. So let me just put that into the comments list for everybody. This is the ready list, and that's available at https colon slash slash bit.ly bit.ly slash DTF underscore RL. So there we go. All right. So that's put that out there to everyone. There we go. So that's so everybody that's on either Facebook, YouTube, or Instagram. I guess I can't post to some Okay, well, I posted to most of the destinations, so hopefully we'll see those there. But that's the address that you want to see um, for the list there. Okay, well, thanks there. All right, Bomadoc. Follow up from Friday. Bought some PBR at 1527. Put a stop in at 1380, hoping for a bounce off the 21-day moving average. Decided to keep my job. It's a good idea right now. Any thoughts on the best price to have the stop? Thanks. Great. Okay. Well, let's look at. Let's just jump on over here to uh, PBR. This is not Pabst Blue Ribbon. Just want to put that out there for everybody. This is not Pabst Blue Ribbon. This is this is the Petrobras, which is the Brazilian national oil company. And the question is where to put your stop. That's a very, very good question. It's coming in here with a cup, and the buy point on this one is 1545. We're below that just barely. What happened is we came up, and this so often happens, and this is one of the reasons why this is a tricky market. But basically, we came right up to the buy point. It punched through, and then boom. This was Friday here, and then it just pushed back down to the uh, almost to the 50-day moving average. Here's where I would put my stop loss. I would probably put it down here and let's look at the technicals here on the daily chart, because that's going to give us the index lines. And let's put it. Oops. Let's put that over there. Let's see. Okay. So we're going to go here with the daily chart. And for some reason, it's not letting me go. There we go. So this is PBR, and we're going to move over to, there we go. Okay, so on the technicals, yeah, there we go. So here's where I think that you could possibly put the stop loss, and that would be at the 50-day line, and we are still a little bit above that 50-day line. And let's see, that would be 1368 would be where I would consider putting. 1638 would be where I would consider putting the stop loss for PBR, and that's basically at the 50-day line. So 1368 stop loss for PBR, and that's the 50-day moving average. So basically what we're doing there is we're putting it basically at 1638, which is basically this little red line here. I definitely think it's going to get some support there. That's where I would kind of bow out if I had to. Would be at that 50-day moving average at about 1368. I think that's going to give you the best, sort of the best bang for the buck there. So that's pretty much it. 1368. So you went into PBR. I think we will get. So you're at 1380. Yeah, that's about right. I would go probably down to the 50-day line, only because a lot of traders are going to be trading on that. So that's what I would do. So that's actually pretty good. I think you're going to get a bounce here. It's all it's that's kind of the record. Now let's go over for Charles over to Exxon Mobil and see what we've got with Exxon. mobile. Let me see if I can get the XOM. And by the way, this is a large part of this is a large part of the XLE spider. The spider select for energy is this. Now today we were looking pretty nice. We're in still in the buy zone on this one. I still think this is viable. As you can see, I started buying it back here on the let's see, 6th of August. So I've been in a while. I started it when it gapped up here in the reversal. It came above that reversal line. That's sort of where I started piling in. Now, by the way, I just sold a call on this one. I don't know if you're familiar with how I do this sometimes, but what I do if I have 100 shares, if I have 100 shares um, of a stock and I want to lock in some profits, many times what I will do is sell a call. I sold a November 18 103 call. So even though it's above this, if I get exercised, I keep the $610. Take a little bit of a haircut, of course, on my average price. But if it goes up, if it's above that, of course, I won't get called. And then of course, and then of course, I'll just keep the money. But this is a good way if you have profits in a volatile market and you have a relatively stable stock. And this has really been the case with Exxon. It's in the buy range now. So I did acquire just about 100 shares of it, and then I've sold a call against it. So this gives a nice return on equity. This is kind of a strategy that I use in sort of a kind of an uncertain sideways type market. So, but I definitely think it's still viable, and yeah, I definitely think it's still viable, and can be possibly a very good deal. All right, let's look at the TLT for Charles. Buy at $20 for long term. Let's look at the TLT for everybody out there. The TLT is a bond ETF. And this is the 20-year Treasury bonds. This is the it's been sort of in this downward trend. It's been sort of in this downward trend, as you can see. Um, and so it's kind of tough. I don't know if I could recommend it, but I definitely think here's the thing about bonds, and I think you got to kind of put this into perspective. If bond interest rates go up, the value of the bonds go down. So there are several ways to benefit from this. With an ETF, there's an ETF called the TBT, which is the double inverse of this. And I want to show you that one, and I want to compare it. See, this is the TLT, which is the long term. So let's look at that one, and then let's compare that, and you can see that's been a downward trend. And let's just go for since the beginning of the year, 1/1/2022. That's been the performance of the TLT. But the inverse of that one, the TBT, that's been doing very, very well, as you can see. So here's the thing: if we think that interest rates are going to continue to move higher, I would be in the TBT and not the TLT. Now I know that when you say for the long term, here's the thing about the long term. John Maynard Keynes said many years ago, the long term are all dead. So right now, the trend is for bonds to become worth less because interest rates are going up. But you can take advantage of that move by going with the TBT, which is the inverse of the bond, and it's a 2x. So this one might be a better bet when looking at when looking at the situation. So let's go with the TBT here and kind of see sort of what's going on here. So you can see that's just moving up extremely nicely. And pull that. Let me pull up the TBT slide here. Oh, sometimes I have. There we go. So this is the This is the chart for the TBT, and the TBT has been moving up. So here's what I would recommend. As you can see, and it is getting a little frothy, Charles. So I don't know if you want to go with this one, but the TBT, I think, is still kind of where you want to settle. I wouldn't buy this now. I'd wait for a pullback. This is a bit extended. This is a bit extended. I'd try to buy it closer to the 10-day line. This is going to eventually pull back to the 10-day line. That's why I think you possibly could buy it. Right now, we're way high above that 10-day line. We're 10% above that. So if you could buy it at about 32, that would be really good. This is 38 right now. So if you could wait, I think it's going to pull back a little bit. When this thing pulls back, because I do expect over the next few months, uh, at least into next year, I do expect higher interest rates. We're going to get another interest rate hike, and I know that a lot of people aren't prepared for this, but we're definitely going to get it, and this should make the TBT work pretty darn well. So, all right, well, thank you. Thanks for, by the way, on TikTok. Oh, here we go. MMTLP, Texas Oil and Tradable Dividend going private suit. Interesting. Let's look at this one. Thank you very, very much for this is from TikTok here. So I want to, and unfortunately, I don't have the feed where I can show the individual user from TikTok. So, but I'm going to try to put it as best I can here. Um, but this is a this is a TikTok. So this is from a TikTok follower, and I want to look at this one because this is interesting. It's going private soon, so I don't normally buy them when they're headed private, but I want to see this one because I do like the fact that it's in the royalty trust area, which has been a very, very good area. TLP, oops, which has been a very good MMTLP. Unfortunately, it doesn't let me see it. This one may be a pink slip stock, but I definitely want to show you some. No, it's not in there. I want to show you the royalty trust area because this one does have some very interesting opportunities in it. And this is the oil and gas royalty trust area. Basically, all is this is just pure dividends. What happens here is they just it's producing oil property, and the dividend payout fluctuates by the basically by the by what oil is selling for on the open market. So let me show you that interesting one. It's called Oil and Gas Royalty Trust. It's the number one performing area of the market currently, and I'm just going to show you the whole trust area. But there are some things that we can look at in this area. This is a 99 relative strength. That means this is in the top 1% of stocks. So this is a very good inflation hedges in this area, the oil and gas royalty trust, because the oil wells have already been drilled. And basically what this is just dividends as they come out of the ground. So a lot of people don't invest, don't know that even these things exist. But this is a tremendous way if you want to see your like 401k grow and in a really tough market is that you might want to look at this because these guys already have drilled the wells. There's already oil there. I mean, it's basically just you're just depending on what the oil price is, that's what your gonna dividend is gonna be. So a lot of people don't even know these exist. So I'm gonna show you the ones. Now, the biggest one, of course, is Texas Pacific Land. This is a giant company. Actually, it's based here in Dallas. It's an old railroad, and it's all the oil properties that they used to own. But there's other ones that you might be interested in. I like this Permian Basin Royalty Trust. Why? Because I think I think it's really a stable, nice stock that is probably going to continue to move up. Now, it's not exciting like a Tesla or something like that, but it is very reliable in terms of its payout. So let's look at its payouts here. And I think that's something, oops, I think that's something we really got to kind of look at with regard. Let's just see if yeah, pull it back there. Okay, I'm back on the screen. so I can show you kind of what I'm talking about here. Let's make it bigger. There we go. So let's make it. No, that's the wrong one. So I pushed the wrong button. There we go. So this is the right button. There we go. All right. So now we're seeing the whole thing. All right. This is the Permian Basin Royalty Trust, and I mean this one basically has gone up. These are sales now. Remember these aren't operating companies. They're just collecting money. It's like you can buy a piece of a royalty. So this one last quarter was up 160% in terms of sales because the price of oil has gone up. Also, if you'll notice, the profits were up 167%. Now, what's so fascinating about this is that these basically have a PE ratio, and they basically just pay out. Uh, this is pretty, relative. The earnings aren't that stable because of the price of oil isn't that stable, but the return on equity. Look at this; it's 1,000% almost. It's just incredible. And on the 5-year range, it's been five, basically PE from 5 to 62. So fascinating area here. I definitely think we're going to see these things move higher. This is called the Permian Basin Royalty Trust, and it basically owns oil properties in the Permian Basin, which is the premier area in the United States where they drill. Now, what's great about this is it is right at the 50-day line, and as you can see, it's getting support there. Came through a consolidation. This is in the top 2% of all stocks out there. It was up today. Look at the buying it. It's $18.91 a share. So I definitely think that this one has potential. If we see oil go up, this will go up as well. So if we go back to the monthly chart here and look, you can see that way back here in 2006 through 8, when we had the last downturn, look at how it peaked. And it peaked up here at about $30. So this one potentially could double, I believe. Now, of course, there's no guarantees in life, but this one is not a bad if you want to park some money. This one is dependent, of course, on the price of oil. So Permian Basin Royalty Trust. Probably what I'm going to do is I'm going to put out a little study on the various royalty trusts out there because there's several of them. This isn't the only one out there, and I think can be a very interesting area to look at. All right. Well, thanks for that, and let's go on to the next question. All right. Thanks. Thanks again, Nick. Hey, Nick. Any thoughts on Google? Should I stay? Should I stay or should I go? Well, here's the thing about the former leaders, and this is one of the reasons why I opened a short on Tesla today. Tesla was very, very good to me in 2020, but every dog has its day, and sometimes the best stocks that were the best stocks sometimes are the best shorts. Now, I'm not saying necessarily I would short Google here, but let's take a look at the chart for Google because it out of the internet stocks, it is the premier one. I mean, it's better than Amazon, better than anything else. But if you look at the chart, we have essentially a downward trend. We have a downward trend on the chart. Let's go to uh, there we go. So we have a downward trend on the Google chart here, and of course it says Alphabet, but that obviously is Google. Uh, and on the Alphabet chart, we do have this downward trend. Now it has been trying to break above the 21-day moving average, but I'm still not totally convinced here. Here's why. This is the trend, as you can see. We've moved from a confirmed downtrend to an uptrend, but I think this may be short-lived. I am not convinced about. First of all, I wouldn't do anything before the earnings. Earnings are tomorrow. Depends on what the earnings say, but my guess is we're going to see lower earnings for uh, Google. And why? Well, because things are changing. We're in a recession, and in a recession, people just don't advertise as much. That's just a fact. Um, the last quarter, we had sales were increasing 13%. But I want to show you this, and this is very interesting with Google. The profits declined 1%. So the last quarter was the wake up call for Google. My guess is we're going lower on Google. Also, if you notice the PE ratio, it's very good at 19 for an internet stock, which is fabulous. But I do, and it has good cash flow. But I just think that there's better fish in the sea out there right now. One thing I would like to show you here is if you compare Google to let's see if we can let's see if we compare Google to um, to ExxonMobil. Let's see what's happening. Well, if we're looking at ExxonMobil and Google, let's pull up the correct chart here. So here's part of the reason why I'm not really a fan of Google right now. If you look at Google and you compare it against ExxonMobil, you'll see that for this year, Google has underperformed Exxon tremendously. As a matter of fact, it's down significantly since the first of the year. It's down almost 25%, whereas ExxonMobil, which is in the oil and gas space, is up significantly. So that's one thing I think you want to take a look at, because I do think that that is a very important factor. Is that I think with Google, I probably would sell if going into earnings. I probably would sell it because I do think it may move lower. I just really do, Nick. I mean, now I can't guarantee this. Usually, what will happen is if it's not bad enough, it'll be like a dead cat bounce. But the overall trend, unfortunately for Google, is lower. So yeah, it's just a tough one. All right. Let's see. Pop's Mint. Oh, 70. I don't know what that is. Okay. All right. Let's see about this one. Netflix. Interestingly enough, Netflix may have bottomed. I don't know if Netflix has bottomed or not, but I want to look at it anyways. They did have some good earnings, and but the problem, of course, is that subscriber growth is going to be difficult. Now, they did pop on earnings. Oops, that's the wrong one. They did pop on earnings, and that you can see here. The problem, of course, is if we go back to the daily chart, would I buy that here? Well, I probably wouldn't. And the reason I wouldn't is even though we're sort of starting to see an upward trend, we're still well below this line here. And what is that line? That is the 200-day moving average. So I don't really like to buy a stock until it's shown some progress against the 200-day moving average. Unfortunately, um, no, I'm sorry. The movement is still going out of the stock. Let's take a look at the technicals here. Yeah, 200-day moving average. Uh, oh, I'm sorry. I guess we just did hit the 200-day moving average. It's right above the 200. I apologize. 370. Is that right? 270. Excuse me. 270 is on the. Well, so it's moved above the 200-day moving average. So that is a good sign. That is a good sign. That's definitely true. But I would get the willies here. Probably would not be a buyer for this right now. I would be a little bit careful on Google just because I do think it's. Yeah, I don't think it's ready to go yet. So it's kind of my take on it. All right, question from Charles on BP. This is the area that I still like a lot, of course, and that's the oil and gas. And BP is one of the majors and a very significant stock. Let's see if we've got the. No, it's going to give us the. There we go. So that's BP. So now we're seeing it. Yeah, yeah. There we go. Oops. So this is BP here. And,
So I'm
Trying to bring this forward.
it's definitely appealing, and I got some advice that as 1125, I should spend my first couple years trying to get theater anti-submarine watch officer and battle watch captain qualified. I'm wondering if there's any crossover between battle watch captain that we're talking about and what I was just recommended to by another O5.
So there you go.
So I'm actually living in Dallas.
On BP,
Do you guys have any?
let's see.
If I was to switch customers?
Huh. Okay. Well, for some reason, I'm not picking that up. BP. There we go. So there's BP. And is that viable? Well, it's getting to the point where it is. We definitely, if we draw a reversal line here, come on, baby. There we go. If we draw a reversal, we definitely moved above the reversal line. This definitely gapped up on earnings, which looks pretty good. So I'm just checking the earnings here. Yes, look at that. Sales were up 85%. Profits were up, boy, 230%. This is amazing. Cash flow is strong. You've got nice return on equity. 5 is the PE ratio. Wow, that's really good. I think yeah. I think definitely this is a winner here. So I definitely think you could go with BP. This is viable, and it's in a buy range, and this is a good company. This is the kind of thing, at least for right now. I think that's kind of where you ought to be kind of really concentrating your looking here. But BP is viable now. So
Those people are planning for costs when they do that on their own time.
oops, come on. There we go. You had the wrong one. So BP is definitely viable here. All right. Well, everyone, thanks for watching today. If you want to get again, if you want to get the ready list, that's super easy. Just go to just go to https://bit.ly/DTF, and this is an underscore here, RL, and you'll be able to get that ready list as well. I'll be back tomorrow, of course. I didn't think out everybody yet. I will be back tomorrow. If you can, it really helps me if you can go ahead and smash that like button because that gets us out to a lot of people. So smash that like button, please. And also, if you're not already a member, just go to YouTube at Dallas Trading Floor and then subscribe, please. I appreciate that. And we will be back tomorrow again at 5 o'clock. Happy trading, everybody. Stay safe.